Today I want us to actually take a look at the order blocks in trading. I understand most of you guys have been seeing me trade, have been following my methods, and clearly you've seen the methods that I use and some of the improved strategies that I've decided to deploy. So today I want us to speak a bit more about the order blocks because I've got so many questions of you guys wanting to know how it works. So now I just want us to dive a bit more deeper into the brief understanding so you know how it works. Maybe you decide that if it's something that you want to move forward or you want to employ into your strategies or not. So now the goal is to understand how they work, understand the bullish, the bearish, understand what order blocks are, see how you can practice them, see how you can find strategies or entries using order blocks, and then from there we're going to scale it up. So this is just the video that's going to focus on order blocks. There'll be more to come that's going to get in a bit more deeper into some other methods that you can fully capitalize on this, because this is the very basics. I'm trying to keep it normal for you here. And by the way, guys, I've noticed that over 70% of you are watching my videos but are not subscribers. I'm not too sure what the reason could be, but the one thing that I can say is if you have found value from any of my videos before, or you're still finding value till this day, so what you can do is you can kindly just subscribe, turn on the notification bell. Whenever I upload valuable videos, you are going to be the first to know about it, and you'll be able to take advantage of it. So yeah, make sure that you do subscribe to my YouTube channel. But let us get started, guys. Order blocks in trading, a beginner's guide, order blocks in trading. Okay, so what are order blocks? Definition: order blocks are price zones where large institutions place bulk buy or sell orders. Importance: they reveal areas where big players influence the market, helping predict price movements. Okay, so you can even see here's just a young picture of how the order blocks, because we're saying that it's price zones where large institutions place bulk buy or sell orders. So now you can see that this is more of how a scenario happened, order block presented itself, and then you can see price even jumped upwards towards direction, hit take profit. Why are order blocks important? Order blocks mark key price levels where trends often reverse or accelerate. Reason 2, spotting them helps in setting effective entry and exit points. So you can see, I'm showing you guys here at the bottom, you can simply see here's the order block, and then on the right side there's a potential reversal area. So let us look at the types of order blocks. There is the bullish order block, which is found in a downtrend before price reverses and pushes upwards, meaning that whenever it's a downtrend, and then market will present somehow a bullish order block for it to reverse and then go upwards. You can see more like this. Price was shooting downwards. You can see price was moving downwards here. It was moving downwards, where the arrow is pointing down. And then as soon as it got to the order block, price reversed and then it continued its bigger direction, which the bigger direction was bullish. So the same thing now, but with the bearish order block. Bearish order block occurs in an uptrend before price reverses downward. So you'll see that maybe in the bigger picture it's in a downtrend, but on that correction, it happens normally in a correction. So in that correction, price is moving upwards. It's like slightly moving upwards. It's just becoming more cheaper. So when you sell, you can get price whereby it's like maybe more expensive. It's becoming more expensive. So you can sell at a price that's like expensive. So you can see price was moving upwards. Soon as you got to the resistance, that's when the order block was presented, and then price went down, and then now it's going up. This is how we were looking for a sell opportunity here. This actually was a trade that I was looking for. So how do you go about identifying order blocks? The first step is to look for large candles that break a trend or a key area. The second step is to notice how price often returns to these zones after moving away. And the third step is to confirm the block with volume spikes or strong candles. So now I want us to actually take a look at how the steps work on a chart, and then we are going to dive a bit more deeper so you get a clearer understanding. So let us start off first with the very first step, which is look for large candles that break a trend or a key level. Okay, let's do that. Okay, so currently I'm now looking at the Nasdaq. I'm now looking at the Nasdaq markets, and then I'm trying to just spot out some order blocks. So I'm noticing that here in this area here, you can see here's an area right here. Let me even put it clean more like this. There's an area here, and you can see how the resistance is. Price couldn't break above here. and then it couldn't break above this resistance area and stuff. It kept on, in fact, even retesting it multiple times. So the first thing is to look for large candles that break a trend or a key level. So I'm seeing here, there's a large candlestick. It broke a key level, which this is support. This is a support. It's a trend. Price was moving in a descending type. I'm not descending. Price was actually correcting here. There's a correction if you look at it. Né? So it broke out impulsively. Okay, that's the first step. I saw this, and then notice how price often returns to these zones after moving away. So once price has moved away, it often returns. You can see here it returned, and confirm the block with volume spikes or strong candles. So how we go about confirming it is that the candles that broke below the key levels, the candles, notice how they come back to where normally the previous candlesticks that represented, like let's say for instance this was a bearish breakout, so the previous candlesticks that represented like a bullish candle, that's when you'd be able to spot. So once price after it broke above, this is where you spot your order block right here. Then you go when price, you just put your limits. So one thing that I like about order blocks is that you go about putting your limits. Let's say sell limit and a stop loss, maybe a stop loss, just to be on the safe side, just put it above here, and then take profit all the way down to here. Then you see 5.3 on this trade with like literally this is a 5-minute chart with like it will activate you here. The next 5 minutes it will come here. The next 5 minutes it take profit 5.3% on this trade. So this is just how you go about it. You'll notice the strong candles that are gonna come activate those trades. So that is just how you go about. So that is just how you go about identifying order blocks. So let us move over to the next point. So that is how you go about identifying order blocks. So now let us move over to the next point where you're gonna see how you go about trading the order blocks. How to trade using order blocks. The first thing is to retest entries, wait for a price to revisit the order block area and confirm with the signal. Example, candlestick pattern, whenever a candlestick confirms, whether it's engulfing, hammer, whatever candlesticks that you're looking for, dojis, all those things. And then stop loss. The second one is stop loss placement. Place stop losses slightly beyond the order blocks for added protection. And then the next one is the take profit. Aim for the next significant price level where price might react. So with this one here, I want us to also take a look at a physical example that I actually caught a trade yesterday. I'll also show you guys that I did actually catch this trade using this method. Okay, this is on GBP USD. In fact, actually caught 2 trades. The other one was somewhere more here. But this is old. Let me just use the most recent one, which is yesterday's trade, which is this one. So I was looking at price. It's moving down, as you can see. It's moving downwards. I noticed that this is our actual first order block right here. Yeah, because this is the impulsive candle that broke below structure. Remember what we did say, below structure here, the impulsive candle that broke below. So this is where we decided that our order block is going to be placed at. So then yesterday while trading now, price was actually, I noticed that price is going to sell. It's going to sell, like come down. Let's say come all the way down. I wanted to sell, like I was looking for this sell opportunity. But while price is moving within this descending pattern here, what we noticed is we saw an inner order block. Meaning that because I knew it was coming here, I spotted as well here, price broke above this. Let me just remove this so it doesn't confuse you. Price broke above this level, this inner channel right here. Boom. So price was like, you can see higher high, higher low, higher high, and then higher low, higher high, higher low, and so on. So I noticed that, okay, no, this is perfect. Price is now trying to break those higher highs up until it goes to our target here on the bigger order block. So what we done is that I was like, you know what, as soon as price done this, when it went down here, then this here, when this move happened, look at this is the impulsive breakout. We're always looking for impulsive. I adjusted, I came here, then I noticed that, okay, this price it broke above. Remember the first step that we said prices to break a significant area. It broke above here, which is a lower high. This was a lower high. It broke above. So this was we placed our order block here because this is the previous bearish candle before price went up and broke those movements, those lower highs. So we had our buy entry right here, and then price came to reactivate us here. So you can see normally we did say you have to wait for the break to happen, you have to wait for the retest to happen. Also for the entry, either wait for an engulfing candle, either a hammer or so on. Normally me, I just use buy entries, buy limits or sell limits, and then stop loss, put it below. You can even put it like less. Yeah, it's just me, I wanted to be on the safe side, so yeah, I put it just below, and then our take profit was all the way up to here. And see, price, as soon as it activated, boom, then it went profit, 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 all the way it hit take profit. So this is actually where we wanted price to come with us, right here, because you see, as soon as it hit take profit, now it's playing around, and this is where we were looking into selling. So it's more like taking a sell here, stop loss just above, somewhere above here, above this area, yeah, and then maybe take profit, come all the way down to here, something more like this. So we'll just see. But how I'm going to be taking it now, let's say how I'm going to be taking it now is, obviously you can see now how price is moving. So right here, I can easily spot that price, I would just like for price to break below here. Once price breaks below here, it will break below. Once it breaks below, it's going to have to go up to retest. And then while it's coming up to retest, I'm going to find an inner order block, which is somewhere here. And then this is where I'm going to sell it. This is where my stop loss is going to be. This is where my take profit is. I can even have this be my first take profit. But see what I've done to the risk to reward, 8.6. And when this is the overall take profit, look, 10.6. You understand? So this is just one of the ways that you go about, capitalizing or looking at these order blocks. So I want us now to look at the tips that can help you when trading order blocks. So the first tip is to stick to the main trend direction when trading order blocks. As long as you're in an upward trend, stick to bullish trades. Second tip is to avoid low volume times for more reliable reactions. I see people trading at any time. You shouldn't be doing that, guys. You need to trade only according. Let's say, for instance, if you are trading New York pairs, trading the New York session, because that's when it's more volatile, there'll be more volume, and it's more likely to move the way that you see it, compared to when you're trading when there's no movements or any direction. I mean, not direction, there's no movements in the markets, whereby it's going to take too long for you to actually even see something. And then tip 3, it is to backtest to gain confidence in spotting high quality order blocks. Truly speaking, guys, this is the honest truth. I mean, for me now, only now making a video about it, I'm teaching you guys and stuff. But I've been trading this for over a year now, order blocks. I started like when I discovered it, I think it was like a few years ago, and I was like just learning it. And I tried trading it. I traded it on prop firms. I've traded it like on actual accounts, and I've traded it for a year for me to actually be comfortable to even start sharing it. And I've seen myself get great results. I've seen myself make decent profits from the markets, and a lot of people kept on asking me how, because with the same way you are not supposed to be making such profits, but it's because I was back testing. I was seeing what I'm comfortable with. Even for now to talk about it is because I've put in more than a year in it. So you need to just put in a year. You need to just put in work in it, guys. So some of the common mistakes that you need to avoid: ignoring the trend. The very first mistake is people ignore the market direction. The second mistake is entering too early without any confirmation. And the third mistake is not placing stops beyond the order block. So with the first one, the best thing that you need to do, guys, is to make sure that you're following the trend. If you are going to execute on the 5-minute chart, look at the 1 hour. At least it should move in your direction. You understand? Like, look at the bigger time frame so it moves in the same direction. And then entering too early without confirmation. Me, with this, obviously I did say I use limit orders, because I know limit orders work best for me instead of trying to time that entry and wait for that confirmation, because I've backtested what actually works and what types of order blocks works in which types of market directions. So I'm more comfortable with that. But at the same time, that's why I say you doing your own backtest, you'll be able to get your own understanding. And then the next one is not placing stops beyond the order block. So most people, as soon as it activates, they don't have stop losses just below it and all that, and it's a mistake, because you need to be able to limit yourself. You need to be able to know where is the limit, where are you taking a win, where are you taking a loss, and so on. So now let us speak about practicing and application. I mean, knowledge, as long as you don't apply it, then it's not going to be useful. Ne? So the best thing that you can do is to use a demo account to practice identifying and trading order blocks. You can just get MT5, create a demo account there. You don't even need a broker to create a demo account, and then you can just play around with the practice order blocks. You can even go on TradingView, you scan the market, you start practicing what I was showing you, what I was telling you, you put them so you can see the order blocks visually. And then the second thing is to review charts regularly to see how price interacts with these levels. The best way that you are going to be able to understand and know that this actually works is for you to practice, for you to put in the work, for you to actually see it give you results. Like if you are taking losses, see how it's giving you losses, learn from them. If it's giving you wins, see how it's giving you wins, learn from them, and so on. That is one of the best ways that you are going to understand the order blocks much more better than anyone else. And remember, guys, the more you put knowledge, the more you put work towards your knowledge, the more you understand something, the better you're gonna become in it. So that's the most important thing you need to take home. And by the way, guys, if you are looking for a broker that you can trade with, regulated fast withdrawals, like super fast, 100% bonus accounts whereby you can fund, let's say 100 rands and your equity is going to be on 200 rands, those types of benefits, then I will make sure that I leave the link, the very first link that's in description. You can just check them out. And then at the same time, if you're looking for a community whereby you want to be, around individuals that are exactly like you, looking to grow in that trading journey, I'll leave the link as well in the description whereby you'll be able to get access to our Telegram group. And on top, I know most of you guys, are always asking me about prop firms, especially when you see us making withdrawals and so on. You ask how does that happen, because I remember people at first, when you are trading real accounts, they say it's not real. When you are trading prop firm accounts, they'll still come up with things that are going to distract you. But if you're looking for funding that will allow you to be able to trade on MT5 using brokers such as IQ Markets, then I will also make sure that I leave the link in the description. But I'm excited, guys. I'm happy that you guys did watch this video up until here. I'll see you on the next YouTube video. It is your boy Somo 2P, and don't forget to hit that subscribe button, share this video with friends and family.